Glad to have all of you here today. And I'd really like to start with a question, and we can go down the line. Blockchain is such a buzzword right now. You can't almost read anything in tech without seeing it. We've seen markets, the asset management world, really digitize. Everybody's moved to the cloud, so much technology, innovation in the last few years, but why blockchain? What is it about blockchain that you can't do with other tech, and how is it relevant to your companies and firms? Let's start here with you.
Great, well, thanks. First of all, thanks for having me here. Enjoying the event. I think it's a great event, and looking forward to this conversation. So I think at Gilded, and from my own personal view, I think blockchain is a really big deal. Some people have said it might be as big as the internet. That's, of course, that's a to be determined sort of thing. But I think the part that really excited me about it was the fact that we can evidence trust, we can evidence transparency, we can provide immutable access to information that people want. And so if you think about it from a very practical perspective, it's not, I think sometimes people think blockchain and cryptocurrency, they're the same thing. They're not synonymous, obviously. I would say it's sort of AOL and internet sort of comparison. But the power of blockchain, I think, is very significant if we think about just a very simple example. Think about the house you own, the car you own, any asset. We could record that. It becomes now immutable, becomes your title property. You don't have to do a title search and all of these things that you do that are expensive, slow, inefficient. Think about your medical records that could be stored, for example, on the blockchain, and access can be given to those people who need it. Your dentist doesn't need all of your records, but they need certain part of the information. And the same thing, of course, applies to what we do at Gilded, which is make physical gold functional. So what we're aiming to do is make it digital, mobile, and usable. And we use blockchain, we use a mobile app, and we use the most ubiquitous instrument in the world, which of course is this thing, which everyone has, to make that asset available in a nice, easy way for people that they can use all over the world. And that applies, of course, to retail investors all the way into central banks and governments.
Perfect, thanks, Jeanine.
Yeah, I think that's a pretty good summary of some of the benefits of blockchain, of course, but I think there's a little bit more to it. I do think that blockchain is as big of a deal as the internet. I spent the early part of my career doing internet investment banking when internet was its own sector. But I think we all recognize that the internet is really just another piece of technology, a real general purpose piece of technology that I think we'll see blockchain develop into similarly over the next 5 to 10 years, where people and businesses and banks and firms don't have a blockchain strategy or a blockchain working group. It does become part of the underlying core of how businesses are being developed. And that's part of what we're doing at Atomyze. For us, we are a blockchain-based platform that is simplifying investing in commodities by way of partially blockchain technology. So blockchain, as was mentioned, allows for security of the asset, transparent ownership, transparent record keeping of where the materials came from, as well as compliance functions, and actually, in our case, the actual title to very specific pieces of metal held at Brinks in vault. For our early products, that'll be precious metals. In warehouses, it'll be the same process when we move into more industrial and base metals. But the concept here is that blockchain works with other pieces of the business. It's not a standalone singular piece of technology. For us, our platform encompasses not only the feature set, the marketplace, the tokenization, which is actually bringing the physical goods, the title to those physical goods on platform, but also the audit process, the inventory process, the relationships with the tier 1 depository that work together to create a comprehensive platform for investing for institutional investors. So I don't see it simply as blockchain for blockchain's sake or blockchain products, but really as an underlying piece of technology that will help benefit many types of companies over the long run.
Perfect. Carlos?
You're the last one, it's hard to say something.
It is.
So let me elaborate a little bit on what they say. I do agree that this is kind of like the next big public utility after the internet was the previous, let's say, public utility. So to understand why this is a big deal, let's understand why the internet was a big deal first. So the internet, one of the things the internet did was enable the long tail of things, right? So if you were a small restaurant before internet, there was no efficient way for you to advertise. And then the internet enabled this long tail of advertising where small businesses could actually efficiently advertise. And as opposed to what people thought before, that the internet was going to destroy the advertising business, it actually make it bigger because it allowed more people to advertise. And the same thing happened with communications. The same thing happened with commerce, where small merchants can actually offer their products to a much wider audience in a very efficient way. how people sell collectibles and stuff like that on eBay, etc. So it was kind of the long tail of things that didn't exist before. So if you think about the blockchain as the kind of the next public utility, the thing that blockchain has that internet didn't have is an efficient way to record and transact with something of monetary value, right? That's kind of, if you think about the bigger thing, whether you talk about cryptocurrencies or you talk about, digital asset securities or tokenized assets, etc. There's basically things that represent actual value that this public utility allows you to transact very efficiently and very secure without any of the problems of the traditional, banking system. So our view is that what this is going to do is it's going to enable the long tail of capital markets. So today, capital markets are kind of a closed thing for certain type of people that can transact efficiently, can raise money, can trade, can borrow, and things like that. And if you think about what's happening on the crypto side of things with digital asset securities, with DeFi and things like that, is basically enabling the long tail of capital markets. People that traditionally didn't have access to raise capital efficiently, like small businesses could do it now. People that didn't have access to trading or borrowing or lending have protocols to do those things, etc. So, and within this space, our company specializes on one particular type of digital assets, which are the ones that represent securities in the traditional sense of capital markets.
So I want to stick with you for a second, because there's been a lot of debate on Twitter recently about what should count as a security. There's a lot of questions still, what we'll see with regulators. Of course, Gary Gensler, very well-versed in this space. So did want to stick with you, Carlos, and ask your view on all of this, and then go down the line and ask what you would like to see from regulators in this space.
I'm not a lawyer, but I think I've been in the digital asset securities space long enough to, be a bit knowledgeable. And I think that, at least in the US, and obviously every country is different, but a security is basically defined as an investment contract, right? So you basically give money to somebody with the expectation that that money is going to, they put it to work and it produces a profit that you benefit from it, right? So under that perspective, a lot of the stuff that you see on crypto today are securities. And it's pretty clear to everybody. And I think it was clear to us when we founded the company in 2017. And we did one of the first security token offerings. So we basically did an ICO in a regulated way, where the token we issue for a venture capital firm represented the LP interest of the firm. And it was obviously a security. And a lot of people did it in a way that basically tried to bypass securities regulations. And I think over time, the different head of the SEC, Jay Clayton before, and now Gensler, are kind of coming down and saying, guys, these are securities, which, by the way, there's no problem of being a security, right? Securities is $1 trillion market and people transact with securities every day. So, but if they're securities, there's certain type of regulations you need to follow, primarily for investor protection, which I don't think is a negative thing. So my view is that this industry is going to get more and more regulated, and if the regulators do it in a mindful way without preventing innovation from happening, that's actually a good thing, because it's going to make it bigger, because it will actually allow a lot of more people that are institutional that today will not participate in this industry unless they have clear rules. So, and that leads to the last point you asked about what do you want from regulators. We just want clarity, right? So if it's a security, it's a security. It's not a problem, but just kind of clarify which things you consider as security and under what definitions, so people know what they need to do, and if things are security, what is the path for these securities to become registered, so you can offer them to retail investors and where they can trade. Like my firm has an ATS, which is an alternative trading system, which we allow to trade private securities, and we're launching now a trading facility for digital asset securities. So we want to make sure we know what we can do or not when we operate on the blockchain, and how trading can happen, settlement, and things like that.
Yeah, so I spent the first 20 years of my career working for companies that were regulated by the SEC. And so I have a lot of respect and admiration for the work that they do and clear understanding of how they operate. I think it's kind of humorous when you hear some of the crypto companies expect that the SEC is going to offer them advice, which is not the role of the SEC to be offering advice. But I do think that there is a clear role for the SEC and other regulators in the crypto space. Carlos highlighted many of them in terms of investment opportunities in the crypto space. But crypto goes much, is just one corner of the digital asset world. And I think sometimes we get convoluted in terms of thinking about digital assets and crypto all in the single identification of those assets. For us, digital assets are really more broad. And I think there does need to be flexibility from the regulators to identify what's a security, what's a commodity, what's maybe perhaps a new type of asset that they haven't particularly identified yet. There's been flexibility from the commission before in terms of creative thinking. And regulation can be painful. I lived through SCI when I was working for the options exchange, and that was a really burdensome regulation. But ultimately, regulations can help create value in marketplaces. They provide strength of robustness of your systems, they provide assurance to investors, they provide comfort for the public when they're getting involved in a new asset. And these are all aspects of the regulatory bodies that can help benefit the crypto marketplace as well as the marketplace for digital assets. At Atomyze, we focus on a little bit different types of regulations. We've been very careful and very mindful of securities laws when we're constructing products, making sure that products are absolutely deliverable so that they can be, for our commodities products, spot commodity transactions. So if you're buying a token, you can actually redeem the smallest piece of material to make sure that we can fit the definition of a spot commodity. So both investors, as well as asset owners and asset producers that are tokenizing, which is the term we use in the platform for bringing your material and creating digital title to it, aren't running afoul of any securities regulations. And I think those are really important aspects of working in this space, is not only thinking about how the SEC should be moving forward and thinking about what should be happening in the space, but also being mindful of the current practices today when constructing products. I think over time, there will be an evolution. There's a lot of lobbying taking place in the crypto organizations today with both the SEC, the CFTC, and let's not forget about Treasury and the OCC, as well as all of the state banking regulators that most of the businesses operate under today, especially for those of us that are handling fiat transactions. There is a lot of learning, but as we heard on the previous panel, trying to get some resources is very difficult. So we're in this together. And I think we'll see a lot of development. It may be that over time there is a new type of assets. I don't know that there's going to be a new type of regulatory body. We haven't seen the CFTC and the SEC combine in the last 20 years. I don't think we're going to somehow see a new third party come in and look for some territory in that space. But I do think that it will become clear over time. But these agencies don't move fast. Their job is not to move quickly, and that is one pain point, I think, for the crypto industry is everyone likes quick answers. But that's not how they regulate, and they're very thoughtful and well-versed in terms of the domains they're focused on, and they need to follow the rules and the mandates that they've been given.
Just to add an anecdote about this, so I agree with you that the regulators don't move fast, but you can do two things, right? You can break the rules, which some people do, or kind of go with the flow with the existing rules and then try to operate and then try to change them. And we had an anecdote in 2019. We approached the SEC to get registered as a transfer agent. Transfer agent is the entity that basically can operate with securities. It's kind of like computer shares, brokerage, AST. These companies have the same license. And we told them, but our securities are issued on the blockchain. And that's the only thing we're going to use as a ledger to record the ownership of the securities. And it took us like 6 months of doing demos of the product and flows and explaining them how it worked. And eventually they felt comfortable. Okay, go and get registered as a transfer agent. And then we got a letter back saying, you have to register the fingerprints of the employees that touch the security certificates. And we were like, we don't touch security certificates. There's no paper here. Everything is digitized on the blockchain. Yeah. And then they were like, well, that's what the rule says. And so we could have done two things, right? One said like, no, we are only digital. We don't register fingerprints. Or what we did is like we registered fingerprints of all the developers, assuming that was kind of the equivalent for the regulator with that. And then we end up getting the registration with the SEC. So, and then now we're kind of telling them, look, this doesn't make any sense. There's no paper certificates for security, so there's no need for fingerprinting. Maybe there's other type of background checks you need to do with the people that have access to the systems, but and then trying to have a dialogue with them to get to change the regulations. So,
do you have any thoughts on the?
Yeah, well, I think I would echo the broader comment, which is about clarity of the rules. I'd say, at Gilded, we're 100 people in 10 countries, 12 states at the moment, and so we're dealing with regulatory environments all over the world already. The U.S. is complicated, and it's probably the most complicated for sure in terms of the places we operate. We're in Southeast Asia, we're in India, and we're in the Middle East, Turkey. So that's something that we see on a day-to-day basis. That being said, I think there are some areas where it is pretty clear. So I think Carlos mentioned it. Some things are pretty clear. They're securities. There's a Howey test, and it's well understood. It's not something we worry about. It's pretty simple for us. We give you direct ownership of the physical asset, which is gold in this case. It belongs to you. It's your title. It's your property. It's clearly not a security. It's clearly not a futures instrument. Having spent almost 30 years on Wall Street and running a multi-billion-dollar investment management firm, very familiar with the SEC and CFTC guidance on that. So we've been particularly careful to make sure that we did all the necessary things to make sure that it's not a futures instrument, it's not a security, it's not some sort of financial asset. It's your title, it's your property. And so in that regard, we feel pretty good about it. That being said, I think there is still a lot of confusion about what's a cryptocurrency, what's a stable coin, what's a security. All of these things sort of jumbled together as one big package, and I think that is confusing to the general public at the end of the day, in the media, and perhaps even for regulators as well. So putting some clarity around that, I think.
I wanted to stick with you and then go to Jeanine, since you're both working in the commodities space. Sort of, what are the challenges and opportunities in that marketplace that you decided, blockchain would be a great way to go? Maybe stick with you first.
Yeah, so I think for us, it's really about when we think about something like gold, which is probably the single most widely held financial asset in the world. And so why do I say that? So how many people own the U.S. dollar or the Chinese renminbi in the world? Maybe a billion, few billion. Pretty much everybody in China and India, so that's almost 3 billion people, owns gold. Middle East, Turkey, United States. So probably every single person in this room owns gold. So and everybody that's watching this. So I think the numbers are well into the 5-6 billion people. Or if they don't, they would like to own it. Every major central bank typically owns it. So that's an asset people want, and it has served. It's the original currency. It's been around for 5,000 years. It predates every currency. Most likely will outdate every currency today too, similar to some of the comments that Ray Dalio made and Nouriel Roubini, that it's very easy to print money, hard to print gold. But it's a really expensive and a beautiful paperweight. And so let's make it functional. Let's do something that makes it functional. Let's leverage the blockchain technology so you can trust that it belongs to you. It's your title, it's your property. You don't need to have it physically in your pocket, in your possession. Let's use a mobile app to make it easy for you to access it. Let's use 21st century technology of a mobile phone so that you can easily use it. It can travel with you. All of these are relevant. So it's not just about blockchain. It's about all of the different pieces. And then it's about, I think it's about freedom of choice. It's not anybody's liability. You're all legally entitled to own it anywhere in the world. It's nice to have it in a vault where it's safe, secure, fully insured, and it's your property, which is very important because that's also bankruptcy remote. When it's your title, it's your property, it means it's bankruptcy remote. That is not what is happening in the world today. You have money in a bank, that's called an IOU. You gave money, they give it back to you because they owe it to you, not because it's yours at the end of the day. It's theirs once you give it to them. If you own a stable coin, it's going to be a similar thing. It's in a banking system. So many of the assets are often custodied or held by somebody who are basically giving you an IOU. What we're doing is we're not giving you an IOU. It's your title, your property belongs to you. And so I always like to kind of use this example from my Wall Street days. You don't want to buy insurance on Bear Stearns from Lehman. That's not a good transaction. Whether you're a hedge fund, an institution, pension fund, or a person, that's not good risk reward at the end of the day. What you want to have is one of the reasons people want to own the physical gold, because it's your title, your property, and you know you own it. And you don't have to worry about anybody else failing and generating a loss for you that you didn't expect.
So at Atomyze, we have a little bit of a different approach. We're looking at an institutional audience for investment in commodities across the board, with blockchain providing the enabling technology to bring the platform to life. We think there's a huge opportunity in spot commodity transactions for a couple of reasons. One, there's a real lack of access today to some of these materials. And these are materials that are driving some of the new economies, like electric vehicle batteries. If any of you have done any work, some of these commodities are really difficult to access even for commercial purposes today. And there's a high degree of interest in investing in these, but the options today are really limited for the typical investor. There might be some futures on some of these products, but there's not really futures listed on cobalt, nickel. It's really hard to do a spot transaction from an investment perspective in, say, a sizable part of palladium or copper. Or even looking to some ESG-friendly products, it's really difficult to acquire them in any verified or meaningful way. So the platform that we're bringing to market allows for investors to actually access these products, similar to Gilded, in a title fashion, but with actually identifiable ownership to specific bars, either held in vault or held in warehouse. And as we expand to other commodities, some of the features that are required are not only the blockchain, but also the securing of the asset, the administration of it to make sure that the double spend problem doesn't exist, as well as the audit and authenticity of it from an auditor's perspective. We see today that the commodities markets are really constrained by antiquated processes and technology. Most of these transactions are done on an OTC basis. Futures transactions don't give you spot ownership to the commodity. You might be able to invest in an ETF, but again, it's not ownership. You're investing in a trust or perhaps pooled allocation of resources. So again, being able to actually own as well as redeem, acquire if you wanted to move it into your own physical vault or take it out from a sourcing perspective, the materials is particularly interesting to many investors, to many commercial users. I think one of the aspects that we're particularly focused on is not simply gold. Our platform will have a portfolio of commodities on it. Our first products being precious, platinum, palladium, gold, and silver, followed by nickel, copper, cobalt, and moving on from there. But these products are largely inaccessible. We'll have gold on the platform. It's a product, as we've heard, is one of the largest investment products in the world, but is typically pretty accessible. If I wanted to go buy gold, I could probably walk up Greenwich Ave and find someone to sell me some coins, and I could take them home and put them under my mattress, or I could invest in ETF pretty easily, pretty efficiently. But getting access to these other products is where we think the platform is particularly unique. And so building a platform rather than being an issuer ourselves. So we're supporting both what we call the tokenizers or the issuers of the materials. They're the ones that are actually coming to the platform, tokenizing their inventories. They're in control of it. They hold the tokens, which again are the titled ownership to the very specific commodities in their wallets until they determine they're going to sell them on the marketplace that we're creating for investors and commercial users alike to come onto the platform. So for us, it's a little bit different in terms of how we're thinking about it. But again, trying to support new marketplaces, growing new marketplaces that the world hasn't seen before, and creating creative ways that are particularly efficient to develop them. Efficiency is sort of, I think the part of blockchain that makes it unique. Yes, you could do this with other technology, but the blockchain makes it efficient, makes it robust, makes it very transparent to users on the platform. And that's why blockchain is a particularly good tool and good use for what we're trying to build at Atomyze.
Yeah, and wanted to ask sort of a two-parter here to start with you, Carlos, and go down the line. If you could give us a little more detail on the blockchain structure, permission-based, what it looks like, explain that to the audience, because I know this is an area that people have different levels of knowledge in. And then wanted to ask, how are you keeping up to date to this space, right? It's evolving, it's new. Are you owning crypto? How do you get started, right? I talked to a lot of institutional allocators day to day that, people who work with endowments, foundations, OCIOs, now facing questions from clients, getting donations in cryptocurrency, needing to figure out what to do with them. So I want to start with you on this one, Carlos.
So blockchain first is a technology, right? So it's just like a ledger technology, if you want, that is cryptographically secure, that allows for, issuing, assets that you can transact in a very efficient way without having to have a centralized entity. So as a technology, blockchain is interesting, but the most interesting thing is, the public blockchains as a public utility, as we mentioned, like the internet, right? So this debate about, permission blockchains versus permissionless, I think permission blockchains are kind of like the private cloud or the intranet that are gonna go away because they don't add any value to the general public, right? The internet became a thing when the internet was the same one for everybody and you didn't have niche places like AOL or MSN or things like that, when it became a public utility that everybody was transacting on the same protocol, on the same place, right? So from a blockchain perspective, when we get to that point on a public blockchain, and whichever is the one that ends up dominating, or maybe there are more than one for different use cases, but that would be when the real value gets materialized, right? Because then you have the same ledger, it's public, it's open, anybody can transact, and anybody can represent assets that can transact with each other using the same underlying technology, right? So some of the things that have been mentioned here, or why things like NFTs are popular or digital asset securities, is because they're all issued on the same ledger, right? And they're issued under the same technology and they're compatible with each other. And it's very easy to, I issue a token that represents a security and somebody else has a token that represents $1 and can transact with them and settle a transaction in a very efficient way. If this were like a permission-based blockchain where that $1 is issued there, but that my security is issued in a different one and they don't talk to each other, they use different technology or they're run by different people, it kind of misses the point, right? So for me, the real long-term value is the public blockchain, whichever is the one that ends up, dominating, whether it's Ethereum or Avalanche or Algorand, some of these ones, that everybody can transact with each other on the same ledger with assets that represent different things, right? So that's my view. And then from that perspective, that's, some people refer to that as crypto. I think crypto has perhaps a bit of a negative connotation because of a lot of other stuff happening. But at the end of the day, the crypto as a public blockchain is definitely what I think is the long-term value. And all this other stuff that people do with permission-based blockchains are just basically shortcuts to fix a problem because maybe public blockchains are not still, fully functional for everybody, right? So if you remember when cloud started, like AWS, when it started, it didn't have an SLA, it didn't have certain, data retention policies. There were some things on public cloud that didn't allow large institutions to use it. So they created private clouds as a shortcut until public cloud was ready. Today, nobody thinks about building a private cloud. It's a completely silly option, right? It's much better to go AWS or Azure or Google Cloud or whatever the public clouds. So my view is that with the blockchain, it will happen the same thing. The public blockchain will be the ultimate platform that people will use and where the value will be realized. And in terms of the other thing, I was actually recently, you mentioned about donations. I was recently approached by the Knight Foundation in Miami, where I live, precisely to figure that out, right? Because people want to donate in crypto. Because if you donate in dollars, you have to sell the crypto and then donate in dollars, and you have to pay taxes. So you want to be able to donate directly in crypto. And then they are actually going to accept it soon. And there's many other foundations in the US that already do that, right? Because if you think of it as another asset class, which is now $2 trillion, so it's large enough, there shouldn't be any reason why you couldn't transact with them directly, right? Because if you have to change it into another, asset class, let's say a fiat currency, it's a taxable event. So you want to prevent that from happening, right? You want to be able to transact natively with cryptocurrencies without having to pay taxes for it.
So Carlos brings up an interesting point. So I do think the parallel to the cloud is a really good one. When I was at the International Securities Exchange, we were the first exchange to run, it was our DR system at the time, but on a cloud-based platform on AWS. And as I mentioned with Reg SCI, everything is under the scrutiny of the SEC when you're working at an exchange. And they had a really difficult challenge to get over a cloud-based exchange platform for many of the same reasons. I think when we think about permission blockchain and non-permission blockchains and public blockchains. And I think it's a very good parallel. And it is a little bit of where we are at Atomyze. We've chosen to be on a permission blockchain, not because we don't think assets should be able to transfer and travel, but specifically because we're trying to meet our customers where they're at today. Most compliance teams, most of the banking regulators are very comfortable with a permission blockchain. And by that, I mean, no one can get onto our network. No one can be authenticated, not a validator, not a customer, not a tokenizer, not a market maker, without passing our KYC, which is regulated by the banking regulators in all the states in which we operate. And so it's a very comfortable position to be in, especially when you're talking to traditional market participants that have, a bilateral relationship today with their counterparties. There have been requests for people to even understand who they're trading with so that trading isn't anonymous, or they can choose a pool of customers that they can trade amongst because they know those customers and they've actually KYC'd them themselves. And so it's a really sort of a transformational approach to where we're at. I think the permission blockchain is really important to get a product, especially in the institutional sphere, off the ground. Most institutions, when you start talking about you're going to have your wallet and you're going to manage your private keys and you can transfer it, they back away pretty quickly because they don't have the staff, they don't have the capabilities, they don't have the compliance to really understand how to make that work. And so we're trying to make sure that they can get comfortable with a platform like any other trading platform that happens to be blockchain based. And then over time, it could be transitioned to a public blockchain. There's no prohibition against that, but we don't think that our universe is particularly ready for that today. It's a different type of product. We're not focused on retail customers, so it has a very different use case than maybe some of the other products you've heard about. But we think it's the right process for us today. We do think that over time, if I look 10 years in the future, there is a different world, but I think there's also different tools that come in. Most of the regulators we talked to today, most of the compliance teams, which I know is not a compliance group, but you all work with compliance people, are really focused about money laundering, fraud, et cetera, et cetera. And these are real worries. These are real world problems that exist and particularly exist in crypto. And when you talk about blockchain, people's minds always go to crypto. So trying to make sure you're distancing yourselves from how those blockchains are working and some of the problems that exist in those chains to what we're doing on an institutionally based platform is really important to get that transition and get that transformation in the marketplace. I actually think it's a good thing for the overall crypto industry as well, because when people get comfortable with blockchain or traditional style systems that are now blockchain based, it's easier to make that leap and that progression into other types of assets, whether they're securities that are on Ethereum or other protocols. And it makes that transition a lot easier. So I do think it's developmental at this point, but I think it's the right stage for where we're at.
And how do you guys ensure that it's decentralized and it's not just a blockchain, but you run all the nodes? So you might as well do it on an Oracle database, right? So how do you guys deal with
Well,
that
actually,
problem?
we're not going to be running all the nodes. So we'll have people that are permissioned on the blockchain that are independent parties that aren't transacting. They're not market makers, but they are running nodes to help create that. And the idea is to grow that universe of node operators over time. But it won't just be us. It'll be other operators as well.
So I think our view is it's not one or the other. It's, of course, there's permissioned as well as permissionless blockchains. I think they'll both survive and they'll both be successful. I think our view is probably that permissioned will be much bigger over time. You know, the internet is a mechanism, but Amazon is a tool that you use. Walmart is a tool you use. Lots of people run their own internets at the end of the day. Your health records, I don't think anybody in this room or anybody who's listening, you're not wanting that on a permissionless blockchain. That's never going to happen. That's something that's very particular to you. It's personal information. It has to be in a permissioned environment that only certain people have access to it. So I don't think there's any way that everything is moving to a public chain in all the things that we do. And there's so much information that's your personal information you're never going to want put on there. So I think they'll both survive. That's our view at the end of the day. I think it's also, I agree with Jeanine's point. It's very important from a KYC AML perspective. I think this is a huge deal. Wolfsburg principles are very relevant when you're talking about something valuable like what we're involved in, which is gold or money, anything that's about money. You have to do KYC, you have to do AML, you have to understand the source of wealth, and you have to understand the source of funds. These are fundamental things that you have to do. And when you start going into a permissionless environment, there's lots of risks that you can't do that, and you're unable to control that, and therefore you start to aid and abet illicit activity. When you're in a permissioned environment, you have a lot more control over that, and you can make sure that every single person who's on your network is a good actor, and that's only people you're dealing with. And in our case, we have the ability in certain countries where we already have the ability to move value instantaneously. And so if you think about some of the challenges the banking system suffers from, it's everything moves in 3 days, 2-3 days. And if you start going cross-border, it could take a whole week. We can already do that on an instantaneous basis, and we're leveraging technology to do that. But I don't want to let people do that where they can use it for a mechanism to advance illicit behavior or whether it's drug dealing or child labor, et cetera, all of these sort of things. So that's sort of one of the challenges that cash faces, is that it becomes untraceable. And we don't want that. So, and we don't want to be an inhibitor for that or a promoter of any type of activity that would assist in that. The other thing I think I would highlight is that you know, the evolution of blockchains is going to continue to grow. But one thing that they're not great at is they're slow. That's just the reality of it. And you know, we've created relational databases almost 50 years ago. They're really fast. And there's no way that any blockchain is going to catch up to that anytime in the near future or even probably distant future, because relational databases have certain power that's ingrained in it that we've got 50 years of experience. And so being able to leverage both can be important at the end of the day. You don't need blockchains for speed. They're not really the most efficient instruments. We see this from an ESG perspective, that when you have to do proof of work for everything you do and every single computer has to do it, it's enormously damaging potentially to the environment in terms of carbon footprint. And it's overkill. Again, as I said, everybody doesn't need to know my health records. It's not necessary, right? And everybody does not need to validate my personal health records, and nor do I want them to do so. So it's a combination of both things that can be leveraged at the end of the day. It's not a, you know, it's the, you know, hammer and nail problem. You know, a hammer, you know, thinks everything's a nail. Blockchain is not a solution for everything, but it can be very relevant in a lot of things, particularly around what we talked about, trust and immutability, you know, traceability.
I just want to say, Lydia, if you had run this panel in 1994, you will have heard saying, oh, the future is American Online, MSN, because it's protected, people know who they are, they know who they're transacting, and that would not have been the internet we know today if it was not permissionless, open, anybody could transact with anybody could build an application, anybody could communicate with other people. So if we think the future of blockchain is a closed ecosystem where everybody needs to know who they are, where only people that are accepted in the club participate and only transact with each other, then the blockchain is not going to be the next internet. It's just going to be another, you know, platform that will do cool stuff, etc., but will not be a revolutionary improvement towards what we have today. I firmly believe that the only way this actually makes a really huge impact in the world, and in particular in capital markets and financial system, is when it becomes really a public utility that is completely permissionless, that everybody can transact with each other safely, and that everybody can actually deploy applications that talk to each other, etc. If it's a closed ecosystem where somebody controls this and somebody controls that, this is not going to be as big as we all think it's going to be. It's going to be important, but it's not going to be revolutionary.
I think we hear what you're saying, but I think we think it's transformational, that it's not tomorrow. I think the government would prefer to shut it down if that were the case tomorrow, that there was no controls, no regulation, no KYC, no AML in a marketplace, especially an institutional marketplace or one where you're dealing with fiat and transfers. I think that's sort of some of what we're seeing today.
You can just do that on the public blockchain, right?
I think we'll see a transformation from permission blockchains to public blockchains, but I'm a big believer that technology isn't static, right? When you look back to the internet in 1994, it's a very different internet than it is today. Maybe not fundamentally in the tech layers, but in the tools and services. And that's the one great thing about the blockchain industry today, is that people are solving problems. I mean, we've all been in this for a while, and you see problems that have been solved in the last 2 months, 3 months, 6 months that existed. Custody we talked about, there was a discussion on yesterday, where custody isn't something that you really hear a lot of people talking about today. Is it safe? Is it safe? Is it safe is sort of a question that's from bygone days in the blockchain era. We've proven that it can be safe. And I think the tools that new companies that haven't been started today can work on to help those processes, to make sure that there is compliance that businesses and governments need, along with a public blockchain that's not permissioned, will help over time. I don't know what those are, but I'm pretty confident.
We are regulated. We're regulated under the SEC. We have a broker dealer and ATS. We have a registered transfer agent, and we operate on the public blockchain. And if sometimes it's required that you KYC wallets, and sometimes it's required that you approve or not for compliance purposes certain transactions. So one thing doesn't prevent the other. You can be 100%. We do AML for the wallets, like we do everything, right? So I think that
But have you seen widespread broker adoption because they're comfortable with your level of KYC?
They are. We are a registered transfer agent, and we do KYC all the time, and we're a broker dealer.
But other brokers, are they interested in your securities in the level of KYC that you provide?
Yeah, they do. Yeah.
They do.
And I'm actually going to pop in now because we got an audience question asking specifically, what is current practice for KYC on the blockchain right now?
So it depends on what type of assets you transact with, right? So there's first, all the virtual, what is called the virtual asset providers, like let's say Coinbase, they have to do KYC because they need to know who they're transacting with. If you deal with digital asset securities like we do, we have to follow exactly the same, KYC procedures that any other broker dealer in the world, exactly the same ones in the US at least, because we're registered with FINRA and under the SEC purview. So we can't have any KYC which is not, it's more relaxed just because our securities are issued on the blockchain instead of being issued on a closed database like other people do. So I don't think that this changes.
But I think that's where it gets transformational. So when we talk about a permission blockchain, I think there's the standards by which the regulators require KYC, which we all follow. Their standards are there. They do their inspection.
They're the same, irrespective of the technology platform you use.
But there's adoption and acceptance of those, which is really different. I think that's where crypto struggles today, is how do you get a traditional universe? We're in an institutional environment today. We're not talking to retail investors. We're talking to people that have traditional brokers. They deal with the large banks. These are all customers that we want. And how do we transition them to a new technology? It's not by way of saying, well, we follow the banking rules and we're good enough and we can be your broker. It's dealing with the processes, the tech, the compliance, the standards that they expect. And so I think when you can get traditional brokers into, whether it's a security environment, a commodity environment, or derivatives in the case, they're harder to come by in the US, but that's when we'll actually see widespread adoption of crypto assets, when they're not fearful of startups that haven't followed maybe what they consider to be their own standards, which might exceed those of what a government requires.
I think that regulators shouldn't look at what the underlying technology you use, right? Like KYC is nothing to do with the technology. KYC is a process for how you identify a customer, and that should be independent of whether you issue your securities on a platform or a different platform, or you keep them on a paper.
But I think that the customers are, right? You were talking about customer adoption.
No, but you look, the reason that there's no institutional adoption is not because of KYC problem. It's because, incumbents in industries are not the first ones adopting new technology. That happens everywhere, right? Like why telcos had SMS when everybody was using WhatsApp. It's kind of the same thing, right? So it's nothing to do with that. It's just because they're not going to be the first adopters of a new technology. It's going to come first for early adopters, by startups, by retail people, etc. And by the way, it's a $2 trillion asset class, so it's not that nobody's using it. 24% of US people hold cryptocurrencies. So it's not.
Well,
it's
we're
not,
going
it's
to
not
have
being
to
adopted.
wrap it up. And on that note, though, I will be happy a decade from now to be back here on this stage with the three of you. We'll see what actually
see
ends
whether
up happening.
American Online or
a
the
lot
internet
to be
is succeeding.
determined still. So I just wanted to say a big thanks to Riz, Jeanine, and Carlos. This was a great discussion and lovely debate. So thank you, all three of you.
Yeah. Thanks.